On today's episode, we are going to take a look at 3 stocks requested by you, the viewers. Like always, if you want me to take a look at any stocks, feel free to post on the comments below. We're going to take a look at recent news, what they do, fundamentals, even price targets. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and make sure to stay tuned. I will be live streaming here on YouTube, taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So the first company we're going to take a look at today is Pinterest. This one I'm really enjoying. I can't believe I haven't really done too much on Pinterest, but it's definitely looking like a super strong company. It's currently traded under the New York Stock Exchange as ticker PINS, and it's at $77.36. Today, the stock price has dropped about 8.3%. And as I am recording this video, there isn't a real reason for this drop. It could just be a big player selling off some shares. But like I mentioned, at the moment, nothing has changed about the company except the stock price. Right now, it has a market cap of about $49.1 billion. And in the past year, this company has pulled back a small amount from its all-time highs, about 13.18. First, let's take a look at their most recent earnings, which they reported February 4th of 2021, a little bit over 2 months ago. Q4 revenue grew 76% compared to the same time last year, and 2020's full revenue grew 48% to about 1.6, almost $1.7 billion. Global monthly active users grew 37% to over 459 million, and they are profitable in adjusted EBITDA values. So Pinterest, we're going to see the main way they make money is through advertisements, right? They are a social platform, very similar to some of the other social players out there right now. Most of the money comes from advertisement. All right, so next I want to take a quick look at monthly active users for Pinterest. Where are they gaining these users? Most of them are actually coming from international. In the past 2-3 quarters, United States has kind of been flat. I do believe maybe between Q1 and Q2, we saw higher growth, but Q2 to Q3 to Q4, it's kind of been flat. It's to be expected, right? Probably so many people came in when we were all at home. But even though United States is the smallest monthly active users, they actually create most of the revenue for this company. And that is to expected, right? We see it with all the other advertisement. Companies are willing to pay more for customers here in the United States. We can see international, though, is still growing at crazy levels. Even United States grew 67% revenue compared to the same time last year. So some cool things about Pinterest that I personally didn't even know. And like I said, I wish I would have learned a little bit more about the company earlier on. But I do think if this company drops, is one that investors, like I mentioned, should really keep an eye on. So for those that don't know about Pinterest, right? Pinterest is pretty much this social platform where people go in to get ideas about what to do maybe with their furniture, outside, with their clothing, recipes, and so much more, right? And within that, their application is actually pretty cool. Let's say you want to make, you want to find cool recipes with strawberries. If you take a picture of a strawberry in their app, they start recommending either things you can do with strawberries, recipes, and so much more. The next cool thing with this Lens platform, it's like, let's say you find a cool furniture, cool art piece, cool something that you enjoy and want something similar to it. You can use their lens in their application and take a snap of it, and then you can kind of find products within Pinterest that you can buy. And again, they get some form of fee in advertising that thing. So I do believe Pinterest has a great move going forward. If we take a look at fundamentals, the company is expected to grow its revenue 24% on average for the next 2 to 5 years. So right now, Pinterest is not GAAP profitable, but we saw they were EBITDA profitable. Good thing is they are expected to be GAAP profitable within the next few quarters. Positive in cash flow from operations, very, very tight, but they are positive there, which is a great thing. If we take a look at their balance sheet looks great. They have $1.8 billion in cash and no debt to their name at the moment. Right now, there are 21 analysts taking a look at Pinterest. 12 give it a buy, 9 give it a hold, 0 give it a sell. The lowest price right now is $78. That's still actually higher by a few pennies compared to current prices right now. The highest price is 107, and the average price between them is about a 9% increase compared to where values are at right now. Like I mentioned, this is a company that if it does take a nice dip, is definitely worthwhile, in my opinion, to add some type of position. The second company we are going to take a look at is Adobe. This is pretty much the SaaS king, queen of the market, right? I mean, this is probably the OG SaaS product. They do a lot of different things from creative and designs. Many of you might know them from Photoshop, Premiere Pro, Adobe Stock. They also have solutions for marketing and e-commerce like Advertising Cloud, Analytics, Audience Manager, campaign on your advertisement. And then you might also know them from their PDF and e-signatures, which they charge monthly fees. Adobe right now is sitting at $523 as I am recording this video with the market cap of $250 billion. It is definitely a big cap company right now. Right now, Adobe is killing it, right? It's only down 2% from its all-time highs. I do believe the great reason is, even though it probably did pretty well staying at home, these are platforms and monthly active users that continue to grow for Adobe. So that reoccurring revenue that they are collecting with some strong margins are making investors pretty happy. They recently reported their earnings on March 23rd for their quarter one of 2021, and they reported that they reported strong results, and they even increased their guidance for the year. Adobe right now, if we take a look, their revenue for their first quarter show 26% growth compared to the same time last year. So it's still a hyper growth company, in my opinion. They are profitable in GAAP earnings and obviously non-GAAP earnings as well. And their guidance for 2021 still represents over about a 20% growth in almost all the markets that they hit. If we take a look at fundamentally, the company is expected to grow 12.6% on average for the next 3 to 5 years. So not a hyper growth stock in what analysts expect, but their earnings, I do believe, is going to be the crazy thing, because that annual recurring revenue, those high margins, can really hit up this stock and do really well for investors. Right now, we can see they are profitable, they are positive in cash flow from operations, but if that's not the case, they still have a nice amount of cash of about $5 billion and only $4 billion in debt. So it's not even leveraged. Normally, when you see a company with this type of earnings and cash flow from operations, you normally see them having a bit leverage. One thing I would like Adobe to do, right, with that cash flow from operations, maybe pay down some of this debt right now, have a better balance sheet for investors to love, and then have that to, if they want to make some great acquisition, they don't have to be too leveraged right now. If we take a look at analysts, Adobe right now has 20 followers, 18 give it a buy, 2 give it a hold, so this is a strong buy. The average price target is $560. That's about a 7% increase from where we're at right now. And like always, at the end of this episode, I'm going to talk a little bit about my thoughts for each company. The third company we're going to take a look at is C3 AI. This was recommended by someone on yesterday's live stream. And this is an enterprise AI company. They have solutions. They're another SaaS company. They pretty much help a company unify all their data, build AI models out of it, and then be able to deploy some form of AI applications with that data. Right now, they are a small company in form of revenues. They're hitting a lot of industries, from oil and gas are usually the main ones. Aerospace defense is another one. And you can check out their website where some of their customers talk about how they use C3 AI. If we take a look at the stock, it has definitely taken a beating. Right now, it is traded under the New York Stock Exchange as ticker AI. And from its all-time high, the stock has pulled back 61%. It has a market cap of $6.6 billion. In their most recent quarter, which they gave us on March 1st, total revenue increased 19% compared to the same time last year. Their subscription revenue increased 23%, right? So this was for the third quarter of 2021. To be honest, based on that, I thought this was going to have a lot higher growth than that. And I think that's the main reason this company has seen an insane pullback. I'm not saying the company is bad at all, right? We're going to see strong fundamentals, but I would have expected stronger growth. For example, for the full year of 2021, they expect about $181 million in revenue, and they're still going to be non-GAAP loss. They're still going to have a loss from non-GAAP operations. So this company, right, not even $200 million and kind of valued at 665. I do believe too right now it might be a bit expensive. If we take a look at future growth, right, the company is expected to grow its revenue 30.4% on average for the next 3 to 5 years. Unfortunately, they are not profitable and they are not positive in cash flow from operations. If we take a look at their financial health, right, the greatest thing about them is they have about $1.1 billion in cash and no debt to their name. It is a great balance sheet, right, for sure. But the reason they need that great balance sheet is because they're not profitable right now and they are burning cash. Right now, there are about 6 analysts. 3 give it a buy, 1 give it a hold, and 2 give it a sell. That's an average of a hold. The average price is 135 between the 6, and that is a 104% increase from current prices right now. So now my overall thoughts. First, I want to say thank you guys for recommending these stocks, and I hope you guys enjoy this. And like always, feel free to post on the comments below what stocks you want me to look at next. To be honest, my favorite was Pinterest. Right now, we saw 8% down on no news whatsoever. The overall market that they're hitting, I do believe advertisement is going to continue to grow and grow and grow as more people kind of start shopping online. So Pinterest, I'm surprised it's not in my portfolio. I wish I would have seen all the cool things that it offers. So Pinterest in my portfolio, if I ever was to buy, I do believe it can even start as a tier 2 stock. The second one on the list would probably have to be Adobe, right? Great balance sheet. I do wish they would pay a little bit more on that debt right now. That would make it, to me, a little bit even more attractive, especially because they have such strong cash flow from operations, mainly because of that reoccurring revenue. So Adobe would be number 2, seeing strong growth, right? Over 20% this most recent year, and they estimate over 20% for the next year. Adobe would, if it was in my portfolio, it probably would be a lower tier 2, right? If Pinterest was a high tier 2, Adobe would be a lower tier 2. The third company we took a look at was C3 AI. One thing, I wasn't a big fan of C3 AI. Doesn't mean it's a bad company, it's just not an investment for me. I think, right, it's for this full year of 2021, they're only expected less than $200 million in revenue. This to me, even though they are making sales, right, I would kind of consider it a bit of a speculative play to some extent, right? Because that price to sales ratio is pretty insane with a $6.6 billion valuation. Again, doesn't mean it's bad, right? It had a strong balance sheet. They're expected to grow revenues at strong levels. So I can see why investors might be excited about it. But I hope you guys enjoyed today's episode. Like always, take care and make sure to stay tuned where I share my new schedule on my streaming, which I will be doing here on YouTube. Take care, guys. Have a good night and see you next time.